Ever wondered what strategies successful investors use to outperform the stock market? Investing isn't just about luck. It's a game of strategy, of understanding trends and making informed decisions. One such strategy that has been proven to yield impressive results is the CANSLIM method. This approach combines both technical and fundamental analysis to help investors make better decisions. Intrigued? We thought you might be. Stay tuned as we unravel the mysteries of the CANSLIM method. The C in CANSLIM stands for current earnings. Now, what does that mean? Well, it's all about the here and now. This aspect of the CANSLIM method emphasizes the importance of a company's recent earnings performance. Let's break it down. Imagine you're at a race and you're trying to pick the fastest horse. Would you bet on the horse that just won its last 3 races, or the one that hasn't won in a year? The answer might seem obvious. You'd pick the recent winner, and it's the same with investing. Companies with strong recent earnings growth are often your best bets. But it's not just about the recent past, it's also about the present. Companies with strong current earnings are like horses in their prime, ready to sprint ahead. They're the ones that investors should be looking at, the ones that can offer the best returns. So, the first step in the CANSLIM method is to look at a company's current earnings. The A in CANSLIM stands for annual earnings. With the stage set, let's dive into the importance of this factor. Picture a company as a marathon runner. The annual earnings are akin to the runner's stamina. The more stamina, the longer and faster they can run. Similarly, a company that showcases consistent annual earnings growth over the past 5 years is like our marathon runner who's been training and improving their stamina consistently. This consistency in annual earnings growth is a positive sign. It indicates that the company is not just a one-hit wonder, but has the resilience and the prowess to perform well over time. This is a crucial trait for sustainable investing. Moreover, steady earnings growth often suggests that the company is doing something right, be it in terms of its business model, management, or market strategy. This makes such companies promising candidates for investment. Remember, annual earnings growth is a key component of the CANSLIM method. The N in CANSLIM stands for new. Now, when we say new, we don't just mean a fresh coat of paint. We're talking about substantial changes that can really shake things up for a company. This could be a groundbreaking new product that's taking the market by storm, a fresh management team with innovative ideas, or the company's stock price reaching new highs. You see, these new factors can be a major driver of a company's stock price. A cutting-edge product can generate buzz and boost sales, which in turn can increase the company's revenue and enhance its valuation. Similarly, a change in management can lead to improved strategies and operational efficiencies, fostering growth and profitability. And when a company's stock price hits a new high, it's often a sign of strong momentum, which can attract more investors. So, always be on the lookout for the new in your potential investments. S stands for supply and demand, and L stands for leader or laggard. Supply and demand is a fundamental economic principle which plays a crucial role in the stock market. When demand for a stock surpasses its supply, the stock's price usually escalates. Conversely, if supply exceeds demand, prices tend to fall. It's like the classic tug of war, with the stronger side influencing the direction of the stock price. Moving to L, which stands for leader or laggard. In any industry, there are leaders and there are laggards. Leaders are those companies that outperform their competitors, usually boasting strong growth and profitability. On the other hand, laggards lag behind, struggling to keep pace with the industry standards. Investors, here's an invaluable tip. Always lean towards the leaders. Why? Because they often exhibit the potential for higher returns and are typically less risky than laggards. In essence, prefer stocks with high demand and be sure to invest in industry leaders. I stands for institutional sponsorship, and M stands for market direction. Now, let's dive into what these two elements truly mean in the context of the CANSLIM method. Institutional sponsorship refers to the support of large-scale professional investors like mutual funds, pension funds, and insurance companies. These big players have the financial clout to drive up stock prices significantly. They do their homework and spend substantial resources on research before investing. which makes their sponsorship a key indicator of a stock's potential. When these institutional investors start buying a stock, it can be a strong signal that the stock is on the rise. Remember though, not all institutional sponsorship is created equal. Look for sponsorship from top-performing funds for the best results. Moving on to M, it stands for market direction. The overall trend of the market plays a critical role in your investment decisions. Even the best stocks can struggle if the overall market is on a downward trajectory. It's essential to understand the current market direction and the potential shifts in trends before you place your bets. This doesn't mean you need to predict every market move, but being aware of the broader market trends can save you from unnecessary losses. So, pay attention to institutional sponsorship and market direction when using the CANSLIM method. It's not just about picking a stock, it's about understanding the bigger picture. Let's recap what we've learned about the CANSLIM method. This innovative approach to investing represents a set of 7 criteria to help you make informed decisions. C stands for current earnings. Always look for companies with robust and consistent earnings growth. A signifies annual earnings, underlining the importance of a company's growth over the past few years. Next, we have N for new. This could mean a new product, new management, or even a new high in price. S and L are for supply and demand, and leader or laggard. Always lean towards companies leading their industry and those with a high demand for their stocks. I represents institutional sponsorship. A company backed by institutional investors usually indicates a good pick. Lastly, M for market direction. Never underestimate the overall market trend. That's the CANSLIM method in a nutshell. Use it wisely and you could be on your way to successful investing.